Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are finding yourself on this channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest exactly within the crypto space, but also the broader markets, and that's exactly what we're going to be doing in this video. In fact, towards the latter half of the video, we're going to be taking quite an extensive look at the broader markets. We're going to be bringing up the dollar chart, and we're going to be looking at the macroeconomic data that we have this week. And we've seen the dollar gain strength on uncertainty around inflation, and we will be bringing up the correlation with risk and the Dixie. We also have a lot of company earnings. It is company earnings season, and that is kicking off big time this week. So we are going to be covering all that. We're going to start the video off by just kind of specifically looking at Bitcoin, looking at Grayscale, which right now are probably the main causer of the price action that we see with, of course, the Grayscale discount trade being closed and people taking profits on that, or the Grayscale discount applied to the trust that was then closed with the ETF. And also you do have Grayscale having higher fees than many of the others, and people are selling their GBTC shares and moving it elsewhere. So Grayscale still have a lot of Bitcoin that could be dumped. I think the dumping is going to come to an end soon. Remember, we are looking at a bigger inverse head and shoulders following the smaller one that we had in 2023. And ultimately, we're in the process of forming that right shoulder. And I want to also bring up the CME gap. Now, gaps on Bitcoin don't make as much sense as they do on the stock market, which trades around certain hours. And that's how these gaps are formed through non-trading sessions. Essentially, with Bitcoin, there's an interesting debate on, do gaps really matter? However, typically gaps do get closed. Even with Bitcoin, are we going to close this one down at 39K? And is that going to complete the right shoulder? The reason I'm bringing this up more so than it's a gap is because actually I think that this is going to be an area of interest for Bitcoin to get a bid and kind of bottom out in regards to that right shoulder. So as always, a hell of a lot to get into. Let's dive into it all, guys. Very quickly, always a quick shout out to our website, allincrypto.com. Please do come over and try out the portfolio feature to track all your cryptocurrencies. Very handy to have an interface where you can track them all in one place and track the price action. Let's dive into what we have for you today. So Grayscale casually dumping 10,000 to 25,000 Bitcoin each day may end up being the biggest blown lead in the history of Bitcoin, and all because they refuse to lower fees. So I don't agree with that. I think there's two things going on here. I think the fees is one, but the fees is perhaps a smaller possibility than the actual taking profits of the Grayscale trust, because Grayscale have actually lowered their fees. It's still higher than others. But ultimately, Grayscale is a massive factor in regards to the price action that we are seeing. And Grayscale are still the largest institution, ETF, or fund in regards to Bitcoin. They have a whopping 581,000 Bitcoin. BlackRock, to put that into perspective with their iShares, have 28,000. And something like MicroStrategy doesn't even have 200,000. The United States government is a massive holder. Of course, China is as well, and Ukraine. And then Wrap Bitcoin is massive. And you also have private companies like Mt. Gox. We're forever waiting for the Mt. Gox dump. And it never comes. That's my experience. And of course, Tether and a number of others. So there's definitely still, I don't know how much longer the selling is going to take place for Grayscale or with Grayscale, but there's definitely still the scope for further continuation in it. Let's dive over to the charts. The good thing about this sell-off is it was expected, and that says something. When you expect something and the market gives you feedback that what you expected took place, that's quite reassuring. And we were expecting this smaller head and shoulders to take us up to 52K, which was met. And you can see typically what happens after you meet a target is you have a rest. Certainly a big target like this. And we can see this across the board. We'll very quickly show some of our stock examples because people still don't believe these technical patterns work. Well, I am proof. This was the NASDAQ, something that we traded last year. Of course, this was our target for the NASDAQ. You can see where it hit to, and then it ran and had a sustained period of rest. And there's plenty more examples. Microsoft is a great one. Microsoft, look at where it ran into, pulled back. We can show you Coinbase also. Similar thing is essentially taking place for Bitcoin. You can see this lower head and shoulders target that we had. There's now a broader head and shoulders we believe is in place for the likes of Coinbase. And across the board, once you make a target, you pull back. Very typical, very traditional. How low is this pullback going to go is, I guess, a good question. I also want to show that it wasn't just Bitcoin making its targets against the dollar. It was also made its target against the likes of the S&P, very much setting up a similar thing to what it's doing on the dollar chart. Also the NASDAQ, and of course, even gold. So a rest for Bitcoin across the board was expected. Altcoins, as always, Bitcoin's still the tide that rises and sinks all ships in the crypto space. You know, obviously having a bit more of a volatile time as a result of this. And we do have technical structures that we believe altcoins are in that we don't want to see too much further downside continuation for, because ultimately the structures that we have, which is essentially looking at Bitcoin down here, some of the altcoins are at that kind of level or following a similar trajectory. You know, we don't want to see that left shoulder round. So we can cover that in another update. So how low is this going to go? Well, something very interesting that was actually brought up to me in my Patreon weekly meeting yesterday, and this is the value of a community. I'm one guy, you know, I can't look at everything. However, when you have a community of people all vested in the same interests, you cover a lot more things and a lot more things go unnoticed. So if you aren't a Patreon already or aren't considering it, do check out the link in the description. You know, we've had a real good influx of Patreons and we have a very high retention rate. And of course, you'll unlock my portfolios, courses, and everything in between. So this is the CME futures. So this isn't backed actually by Bitcoin, but there is a gap for the CME future. So gaps typically, and we'll draw some of these just to show you, do get filled. Now, with Bitcoin, because Bitcoin is a 24-hour market, I think gaps have less of a degree of accuracy. So gaps occur in the traditional stock market, and I'll show you some examples of gaps getting filled, like Apple was one. We'll show you it after. In fact, I'll show you it on the Bitcoin chart. They are, of course, both Bitcoin charts. One's the CME futures. So Apple was one that we said a gap was going to get closed on. Can you see this gap here? Let's put that in. And essentially how this happens is from the time the market's closed to the time they open, there's been a big volume and it causes a gap. So the price just instantly, starts lower. And these gaps often get filled just like we're seeing with Apple. So are we going to see a similar thing with this small gap here? I'm showing you some examples of gaps getting filled on Bitcoin. You can see probably more immediately. Rally up. This is where the neckline occurred. You came back to fill in a kind of microcosm, actually, of where we currently are today. So if you look at this as a lower down inverse head and shoulders, and you look at this one, you can see gap, gap. And are we just going to stab into this before we then see continuation? Now, the reason I think actually this could be probable isn't because I think gaps have the same degree of reliability as they do on the stock market in regards to them getting filled, but it's more because I actually think people will be paying attention to this. And you have the same traders in traditional markets that you now have in crypto. So this gap would be closed at 39,760. This would beautifully fill us in for this right shoulder. And then we can project 150K kind of area. And of course, altcoins getting thrown around quite violently as a result of this, but many altcoins I think look primed for upside continuation. So the CME gap's very interesting. We'll see how this week progresses from a kind of internal crypto point of view with Grayscale, the ETF stuff, and of course the price action. This is going to be, however, a pretty big week of data, and I want to switch over to the Dixie chart. So you've ran into macro uncertainty going into this year with the readjusting of rates, or the readjusting of forecast of rates that have been based on higher than expected inflationary prints. And I've always said actually that March was way too soon to start pricing in rates. We actually want sideways rates for a while because the markets do well under that context. This is one of our macro reasons for being long the markets. So obviously the correlation here is very stark. Dixie down, markets up. Dixie up, markets down, and vice versa. And you can see just looking specifically at where we are today, this little bit of Dixie strength has coincided with the market stalling on that kind of macro uncertainty. Now, we have a broader target for the Dixie. We ultimately think that it's going to come down and has been in a range since 2008 when we truly entered this banana republic. I think the Dixie is on its way down here, and this is going to support our bull market narrative. There's reasoning to expect this in regards to rates. I do expect rates to fall. I'm not in the camp that rates are going to go much higher anytime soon. I think we're going to start the progression of rates going down, and then there's going to be a real bond issue that could cause them to spike. But you can see that, again, when rates start to fall, the dollar comes down. When rates start to fall, the dollar comes, so on and so forth. So we do expect the dollar to come down to this lower band of the range. However, we do need to get past this little bit of dollar strength, which is macro uncertainty for gold, Bitcoin, and the SPY, of course. And I do think that will come. And I think With this week, you're going to get a little bit of clarity in regards to inflation. You know, if we look at the week ahead that we have for you, the main day for me is Wednesday because you've got a lot of PMIs, so manufacturing, purchasing, indexes basically. So you've got Japan, you've got Germany, you've got Eurozone, you've got UK, you've got US, you've got Bank of Canada rate decision and USEI crude oil inventories. You've also got the ECB rate decision. You've got US GDP and so on and so forth. So it's going to be a busy week from a sort of economic data point of view. The dollar is crucial to watch. So I think this is going to be one of the best shorting opportunities for the dollar here. I don't expect it to run 104. If it does, then you're breaking the short-term trend. That's going to mean further headwinds for crypto. And on top of that, you also have a lot of company earnings. It is company earnings season, ladies and gentlemen, as we start a new year. And there were some interesting company earnings from Goldman and Morgan Stanley last week. But this week alone, you can see the volume of, we'll highlight it here for you, companies that we have. We've got Visa, Netflix, we've got AT&T, ServiceNow, Tesla, Blackstone, Intel, which is going to be an interesting one. Intel's been very interesting. American Express, Johnson & Johnson Electric Motors, 3M. And then next week, it's even bigger with some of the big boys coming into play. So there's going to be a bit of volatility on the back end of this. It is going to have an impact. The question is, how does this all impact crypto? Well, I think the best charts to watch would be, and we'll pull it up for you just now, Bitcoin versus some of the stock markets. And again, is this going to be what causes the bottoming of the right shoulder in these markets, and a similar thing to play out to what we're looking at with the dollar? So it is going to be an exciting week. One of the main things to watch, I guess, is ETF inflows and outflows. Is the kind of tap drying for Grayscale? Well, they have a very large water reserve, continuing on the water analogy. However, the arbitrage may have sort of come to an end. We will see. Again, I'm still fully expecting this right shoulder to play out. I think there's going to be some tricks and turns. I would like to see a sort of stab down or close that CME gap. It's a fine support, and then we start rocking and rolling again. Once you get that confirmation of a breakout, just like 25K, it's the altcoins are going to do quite well. And we are expecting Bitcoin dominance to roll, as well as others' dominance to gain, which is very suggestive that alts are going to do better than Bitcoin, which is typical of a good time in the markets. Alts typically do worse than Bitcoin when the markets are going down. And if we look at Bitcoin dominance, which we pulled up on a number of occasions, this is kind of what we're looking at for Bitcoin dominance or scenario forecasting. And this is a clear bake-in market structure. The trend with Bitcoin dominance: bull market, bear market, bull market, bear market. And we think the bull is here. So quite a comprehensive one. That's really all I've got for you. If you've enjoyed this content, a like is appreciated. So is a comment. And on that note, I'm going to love and leave you. Thanks for watching. Have a happy Monday.